Hi, I want to take the next few minutes to show you how to build a $1 million dividend portfolio and the steps that you need to take to be able to do that. My name is Jeff Wright. I'm with Fish Creek Capital in Birmingham, Alabama, where we love to focus on dividend growth portfolios. Please like and subscribe. That will help out tremendously. Okay, why do dividends matter? Dividends matter because they offer income, stability, and an overall total return. Did you know that dividends make up about 40% of the stock market's long-term total return? Remember, dividends are like cash payments. You want to think of them as like rental income for your investments. Okay, let's get into the steps, specific steps to take to be able to build this dividend portfolio. All right, first thing you want to do is define your goal. Most people are investing for the long term, so you want to make sure that your dividends are being reinvested so you can take advantage of the compounding effect of just long-term investing. That brings up time horizon. Do think about your time horizon. The younger you are, the sooner you start, the more time you have to grow your portfolio and to take advantage of that compounding effect. The next thing you want to think about is your target yield for your dividend portfolio. Most of the time, we can help you with a yield that's going to be greater than the S&P 500. This generally is going to be 2 to 4% yield is a sweet spot on a realistic, sustainable, repeatable yield that will grow your portfolio and create generational wealth with no problem over the long term again. You want to think about diversifying your investments across sectors. So you want to think about utilities, consumer staples, healthcare, real estate investment trust. Those are all sectors. And then when you're looking into these sectors, you want to look specifically for dividend growth stocks. That's what we highly recommend, because if you can have a history of 10 plus years of dividend growth, which you can actually go out there and look on sites like seekingalpha.com to help you find stocks that are like that, that will help with your the overall return, and again, just building that generational wealth. So you're looking for sustained growing dividends. You also want to focus on the payout ratio. That is what companies, that's a number that describes what a company has as far as in cash that they're using to pay out that dividend. That's very important when it comes to the sustainability of the dividend. You want to usually be less than 60% on that. And just look for consistent earnings, again, growth of those earnings, because that results in the dividend growth, and then just the free cash flow to support the dividend payout, which again, the payout ratio can help you track that. Another way to just build your portfolio and something to look at outside of dividend stocks are using ETFs for some simplicity. There can be tax benefits to that. Dividend ETF that I like is TBG, TBG ticker symbol. Check that one out. Okay, what to avoid with your portfolio. We've talked about this a little bit on other videos. Again, highest yield does not always mean the best investment. You want to look at also if there's negative earnings, what happens in a downturn in the market. You can go back on data and Seeking Alpha again and look for data like that, and if the payouts are unsustainable. You also, once you get your stocks picked and everything set up, you want to manage and just maintain your portfolio. So review your portfolio quarterly, semi-annually. You want to reassess the dividend, performance, your balance, sector balance. Definitely watch for dividend cuts in an economic downturn, or if an industry is facing certain pressure. And then yearly is a good time to look for just rebalancing your portfolio for winners, selling winners, or underperformers, and being able to make sure you're keeping your dividend yield where you want it also. Quickly, just to a sample portfolio, I can give you Johnson & Johnson. That's a blue chip consumer healthcare stock that you know about. Coca-Cola, consumer staple company. Procter & Gamble, defensive brand for Procter & Gamble. Realty Income is a REIT, that real estate investment trust, that actually pays a monthly dividend, and they have a long-term history of that. And again, from an ETF perspective, TBG is one that you can look for. Those are 5 examples there of great dividend paying stocks that have a strong history of dividend growth. Some call those aristocrat investments even. Well, thank you for watching. That's just a quickly going through the process of how to build a dividend portfolio. Please comment below if I can help you with that. And again, like and subscribe. Talk to you on the next video.